Very good morning, friends. This is Monday here. Monday. I'm coming up with nifty analysis. I'm on the weekly chart. Welcome to my channel Stock Index Edge. I'm Nanakshi Swami. So it's an interesting thing. It has called for, on the weekly chart, you are seeing a bearish weekly candle, but it is a doji with a long leg doji on the downside. It is showing buying pressure. And on the upside also, there is selling pressure, but it has closed below the open. That's why it has become bearish. This type of candle, it is a manipulative candle. So manipulation has taken place last week. They pushed the price down to this level, 20,967, and price has been traded within 1 or 2 days to the level of 21,352. So it is a manipulation candle which calls for buying time. Probably time might be spent in this week from Tuesday onwards till the expiry. Time may be spent in this area. That is 21,403 to 20,967. So we are seeing a manipulative weekly candle. So indecision candle with a buying pressure on the downside. Manipulation has been taken, excessive manipulation has been taken towards the downside and it has been closed. So now very, very important levels for this Tuesday trading is 21,346 to 21,454. Probably if it starts trading above this level, 21,440, it has got room to go because 176 points manipulation has taken place on the upside. So it can go up to that 21,558, 598 or 531. This is the level it can go. So I have applied the volume profile also. If you see the volume profile, most of the trades, this is the POC. That blue color line is the POC, point of control, from where the price most buying pressure has taken place. Though there was a low volume area, it has been filled and now they have closed on the upper side. If I go to the daily chart, you can see a big candle fall. You can recall the big fall. These type of movements are seen nearly in the month of end. Usually month end, you are seeing this type of big calls you are seeing on the month ends. See, throughout the month, there was no volume, small, lot of manipulation. So there was no trade for the retailers. Very good trade for the retail. Either it used to be a huge gap up and retailers never able to take a good trade. See, this is what after the value here, the point of control has shifted. If I move down on the daily time frame, point of control has shifted down to a, and this is the value area. Value area comes to 20,693. Now the market here, you can see the manipulative candle over here on the daily time frame. You can see a buying pressure. Later, it was a gap up. You may not see that type of gap up here in this. Probably it may trade within this range. Within the range of 21,544, probably there may be some sort of coming down, whipsaws and moving like that. So for that, there are important levels are 21,230 on the daily. You can see the low of this candle, 21,232, and even it can come and retest this level, 21,142. So there is possibility. So you need to be ready for that. But they will manage. They will see that it will not go below this. So in this week, the trade will be within the range of 21,600 to 20,976. The time will be spent in this week. Later, we have to see how this weekly candle this coming weekly candle will close, and the direction will be decided. And also, if you see on the weekly chart, there is in the volume profile, we can see a lot of gap over here. Imbalance we can see in this area, that is around 20,508 to 20,392. So if they want to fill that gap, they may come down to this 20,508, because this is the range breakout. This range breakout has taken place with the gap. So if they come back to this gap and fill this gap, then there will be a lot of buying pressure in this market. So in this week, these are the important levels, leg of the weekly candle, that is around, and the low of this is 20,976, and the upper boundary 21,600 will be the range for this week. Actually, you need to play according to you. You should not think ahead of the week. However it trades, whatever it trades, you need to trade along. As a retail trader, you should give importance to this. Okay, let me go to the daily time frame. I have shown this. Let me go to the lower time frame. Let us analyze how the market has failed. See, from this area, this is an important area from where the market has shown imbalance. It has fallen below that. Did it go anywhere? This is the level, actually. This is the level 20,774 from where the swing had taken place. They have filled the imbalance. See, imbalance has been filled over here around 20,961. So there was a swift movement within the market, and it tried to push into this zone. In this zone, the zone between 20,443 to 20,347, but it has closed on a daily time frame. It has closed little below this zone, 20,332. Now the real support comes. This is the real support, because this is the flip zone. This is the flip area, that is 21,182. So you need to have a keen watch on this level. It may come down. It may come down, creating panic. See, this is the pattern. It can repeat. See, like this. So this is the pattern. It can come down, or it can even push down to this level, because there is an order block over here. Since there is an order block, it has not been mitigated here. You can see, I'll mark this order block. Let me color it in a different way, and let me extend it, okay? Let me extend right, so that you will get the levels actually. So if I do the order block, this is another level, 21,159 to 21,000. So these are the zones. You need to keep watch on these zones. Probably it can come down, sweeping this liquidity of 21,185, and it can start moving up. So on this week, probably these are the levels you should keenly watch. You can go long around this 21,000. So for the barrier for this week is 21,152 to 21,185. Keeping this as your stop loss, you can go long to it may continue to the level of, it may even fill this gap. That is what happened. There is a gap, imbalance over here. This gap can be filled. the market can go up to 21,464 to 21,540. So probably it may sweep the liquidity beneath this stop loss and it may start moving higher. So 21,185 to 21,152 is a very important level on a lower time frame, and you can trade with that. You can trade, and even it can pop up above this level. So after filling this gap, so there will be, after filling this gap, there may be some reaction. So time will be spent within this range in this week. So weekly expiry can be within the range of 21,152 to 21,500. So, okay, friends, thank you very much for listening to my video. Please kindly subscribe and support. I am bringing genuine analysis, not like other YouTubers saying that it is a fall, it's nothing, blah blah blah, like the market crash and all those things. It's a sensible analysis. What I'm doing, I don't go beyond that. So now I will go along with the market to analyze the things to help you out, people. Thank you very much. Nalnakshi Swami signing off.